Hello and welcome to the Stronghold Digital Mining Daily Update. Today's Friday, February 16th, 2024. A quick side note, Monday of next week is a holiday here in the United States of America, so financial markets, to the best of my knowledge, will be closed. So as a result of that, shares of Stronghold Digital Mining will not be trading. However, as is the case every day, right, Stronghold Digital Mining's operations will continue. And of course, Bitcoin trading is nonstop 24 hours a day. And speaking of Bitcoin, I do see that the price of Bitcoin continues to remain very robust, close to $52,000 a coin. I mean, these are very, very promising developments given the fact that, hey, look, Bitcoin has been in a bit of a crypto winter, or at least it had been. I think it's probably getting safer to say that we are not in a crypto winter anymore. Maybe it's still early spring. Maybe, right, things are still kind of waking up and coming to life. But I do suspect that we are on an upward trajectory as it relates to the price of Bitcoin. Now, something else that it has a bit of an upward trajectory are these renewable energy certificates or, renewable energy credits that I referenced briefly. Well, not so briefly. It was sort of a big part of what we talked about yesterday. So a quick update. And thank you, by the way, to my friends on Twitter or X for your insight and your commentary regarding this topic, because I think collectively we're able to better discern what's going on. And so when it really comes to these RECs, pricing is quite robust. We're talking about $34 to $35 per renewable energy credit. So if Stronghold Digital Mining is running right at, say, full load, so say roughly 165 megawatts between Scrubgrass and Panther Creek, and you multiply 165 by 24 hours in a day, I think that's like 3,960. Let's just call it like 4,000 to keep the math easy. So on any given day, we have the potential to be creating or generating about 4,000 renewable energy credits. So when you do the math and you say, okay, you have 4,000 of these, let's say, multiplied by, say, $34 to $35 per credit, that really starts to become a very meaningful and very interesting number. Now, where it still remains a bit intriguing to me is this question of, okay, we treat it as a contra expense to fuel. I'm going to be very interested, as I'm sure some of you are as well, in taking a very close look at our Q4 2023 data, which lamentably oftentimes needs to be extracted from the 10K, right? There's usually not like a Form 10Q that's specific to the fourth quarter. Instead, you have to have had, which I do have, like the accumulated data for quarters 1, 2, and 3. And then I typically then have to subtract that from the yearly data that's published in the 10K for 2023 to get a more granularized sort of like picture of, for example, like, fuel expense for the fourth quarter. And so what I'm specifically interested in trying to figure out is, okay, like I understand that our fuel itself, like, which is like mine waste, that is largely, like a somewhat of a de minimis cost. Where the expense really starts to add up is with regard to the fuel surcharges that are associated with getting, or let's call it a diesel surcharge, just to sort of differentiate from, the word fuel being, of course, our fuel source, and the diesel, sort of like fuel that's needed to power the trucks that bring material to either Scrubgrass or Panther Creek, and, so on and so forth. So that surcharge, that obviously can be a pretty high number. But, there comes a point where you're like, all right, I mean, and I've thought about this, like, is there a way to somehow utilize trucks that somehow maybe use some other fuel source or some other mechanism of doing this. There is a train track that runs right by Panther Creek, for example. Is there not a way to potentially bring in some of this material by train? Again, this is a bit tricky because some of these sites that are being remediated, right, they themselves are not by train tracks. And so you kind of run into this catch-22 where it's just easier to, truck the material in and then, of course, truck any beneficial use ash that's being sent back to the site in question, right, or that's being remediated, just send it back, ideally, right, with the truck that just dropped off some more mine waste. Anyway, I don't want to get too far into the weeds with this, but my point is, when we treat renewable energy credit revenue as a contra expense to fuel, and yet we sometimes have in any given quarter, fuel expenses that might be anywhere from $6 to $8 million. You start to ask yourself, and that's why I want to take a close look at Q4 2023, pardon me, just to really see what that fuel expense looks like. Because as the price of RECs continues to increase, I'd like to believe there's a point where, REC revenue sort of like serves as almost a complete contra expense to whatever diesel fuel surcharges there are, so that our actual fuel expense is like really, really dramatically lower than it perhaps has ever been. So that's something I'm really keenly interested in looking at in more detail. Look at from the perspective of our stock price, right? It looks like we may have closed at around $5 and maybe 50 some odd cents a share. Hey, look, I think that the entire publicly traded Bitcoin mining ecosystem, we've seen the entire sector kind of start to come back to life. There is going to be a point, I believe, where shares of Stronghold Digital Mining will get re-rated because, we're looking at revenue inputs for this company that are very intriguing and meaningful. And I'm talking about revenue inputs that have nothing to do with Bitcoin mining, which, by the way, I see here right now, like hash prices are about like roughly a little over 9 cents. That's really helpful and really constructive. So I'm not trying to diminish the revenue potential of Bitcoin mining. I think that's great and it's there. At least as of right now, it's there. But Stronghold Digital Mining truly does have these differentiated sources of revenue, even though they're being treated in some cases as contra expenses. And so it kind of gets a little bit convoluted that way. But I mean, we're talking about money coming in that's not dependent entirely on hash price. Keep in mind, for 2022, the reason we as a company were cash flow positive for that entire year, 2022, a year that proved to be catastrophic for a number of companies within the publicly traded Bitcoin mining ecosystem. I'm thinking of one company in particular that had to go into bankruptcy that was publicly traded. And there were a number of other firms that really struggled. The reason why Stronghold Digital Mining was able to actually produce a really good and useful result was because we have a differentiated source of revenue as it relates to selling electricity to the grid. That's really, really helpful. The fact that we can generate additional revenue through renewable energy credits, that's awesome. Pretty soon, we're going to also, hopefully, don't want to jinx anything, be able to generate some really meaningful, incredible, and, truly like spectacular revenue from, carbon capture credits. Again, this is all stuff that's not, and again, maybe this is why we don't trade at a multiple of a pure Bitcoin mining company. Right? Hey, Stronghold has whatever, a bazillion exahash. All we do is buy Bitcoin mining machines, and that's it. Maybe it would be easier that way, right? The market could just better understand what we do. But we really do have some truly differentiated sources of revenue, which I do think provide some downside protection. And you know what? We do have exposure to Bitcoin mining economics. I mean, it's not as if though we don't have material exposure to Bitcoin mining economics. We do. Now, to Greg, Chief Executive Officer of Stronghold Digital Mining, to his point that we are subscale as it relates to Bitcoin mining for a public company, Okay, fair enough. Well, what's Greg's prediction? And again, I'm paraphrasing here. We're either going to merge with someone else, we're either going to buy someone else, or be bought ourselves. So again, I want to keep emphasizing it sounds as if though Stronghold Digital Mining is in play. So I think we're going to be attractive as a merger partner, right? If, again, we're able to execute, which I believe we're doing, get the carbon capture project up and running, at least in a manner that, hey, you can actually see this is working. That's really important. If we do that, if we continue to see some really positive pricing action as it relates to renewable energy credits, and if we occasionally see energy prices, right, grid prices, behaving in a somewhat constructive manner, I think we're going to be just fine going into the Bitcoin mining halving. Notice I mentioned nothing about the potential for Bitcoin itself to maybe get up to $70,000 a coin again, maybe start to approach $100,000 a coin. These are very real possibilities. This isn't completely, pie in the sky kind of talk. I mean, I think this is like something that could like legitimately happen, not like in 20 years, but rather quite possibly in the next, say 6 months, maybe a year, where we could really start to see the price of Bitcoin moving up into that pricing range, which again, after the halving, can really ultimately result in a situation where our revenues are now coming in quite nicely from a number of different sources. Renewable energy credits, carbon capture credits, grid sales, and Bitcoin mining. I mean, to me, Stronghold Digital Mining is an amazing company. I believe very strongly in the mission and purpose of this business, and I'm very, very proud to call myself a Stronghold Digital Mining shareholder. And I hope you feel proud about that as well. Okay, my friend, let's stay positive. Let's be great. Remember, Monday's a holiday, so we probably won't see each other on Monday, but I do look forward to speaking to you again early sometime next week.